Exercise 4-22, we're going to journalize the closing entries from an adjusted trial balance. And these adjusted trial balance columns would also be found on the worksheet. So the adjusted trial balance of Stone Sign Company follows, which I open by clicking here. And it says, assume Stone Sign Company has a January 31st year end. So it's the end of the year, and they happen to end their year on January 31st. Journalize their closing entries at the end of January. How much, and then we'll figure out how much net income or net loss did the company have for the year, and how can we tell? So the closing process is really to do two things: to calculate how much net income the company has, but also to calculate what's their new balance of capital is. So we're going to get practice figuring out what the net income is, and we're going to get practice figuring out what the ending capital is. You don't need to get the ending capital for this problem, but you will in future problems, and also in the real world you'll need to do it. So we want to get practice with that. So requirement 1, well, let me move this up. Requirement 1, assumes Stone Sign Company has January 31 year end. Well, yeah, we already know that. Record debits before credits, of course, and then select an explanation on the last line of the journal entry. So the first step in the closing entry, in the closing process, is to close the revenue accounts. And most companies have more than one revenue account. In this case, they only have one. But you're going to close the revenue accounts to income summary. So on our adjusted trial balance, let's look for revenue accounts. So assets are listed first. So here's assets and contra assets, then liabilities. So this is a liability, 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 liability. And then we've got a capital, withdrawals, and then revenues are afterwards. So this is our only revenue account we have. Notice they show that our balance in service revenue is $17,300 on the credit side. So the balance is on the credit side. So how do we close this account? Because remember, we want to eventually move the revenues to capital. Eventually. First they'll go into income summary. So to close an account that has a credit balance, you're going to debit it. So I'm going to copy and paste the $17,300. And I'm going to choose service revenue. So now we've closed service revenue. So in this first step of the closing process, we're going to close the revenue to income summary, which is a temporary holding tank that's going to contain the income, also known as net income. Copy and paste to close revenue. Check my answer. Excellent. All right, so let me close this temporarily. So what we should do, to make the closing process much easier, on a piece of scratch paper, and my scratch paper is this Excel spreadsheet, I'm going to do a T account for income summary, so when it comes time to close income summary, it'll be easier to figure out. So notice over here, we have credited income summary $17,300. And that represents the revenue. So I'm going to, because income summary is being credited, over here, income summary under a credit, I'm going to put $17,300. And again, remember that represents our revenues. Cool. The next step, let me open up my adjusted trial balance again. The next step in the closing process is to close the expense accounts. So let's find our expense accounts. And our first expense account, expenses, remember, are listed after the revenue. So here's our first expense account. So salaries expense has a debit balance. So how do I close this? I'm going to credit it. And because I have to list the debit account first, I'm going to skip the first line because I need to credit salaries expense, $3,700, to close it. And we'll figure out the debit later. And next I need to close the rent expense. How do I close an account with a debit balance, I'm going to credit it. So I'm going to credit rent expense. It is now closed. Next, we've got what? Depreciation expense on the equipment. I'm going to credit that to close it. Oops, I clicked on the wrong one. So that was rent expense. And this is depreciation expense on the equipment. And then we've got supplies expense. I need to close that. Again, I'm crediting it because supplies expense has a debit balance. And then finally, utilities expense, I'm going to credit that. All right. Now notice, obviously, debits, which is nothing so far, don't equal our credit. So what we need to do is we're going to add up 3,700 plus 1,400 plus 400 plus 300 plus 600, and then put that in as a debit to make this thing balance. And it turns out that when you add those up, you get 6,400. And where do we close our expenses to? They get closed to income summary, because remember, income summary is summarizing net income. And what is net income? It's revenues, right up here, and expenses, right over here. We need a explanation to close expenses. Now on your piece of scratch paper, you should update your income summary account. So notice income summary here, oops, income summary over here is being debited. So on my piece of scratch paper, on the debit side, I need to put 6,400. And remember, that represents expenses because these are expenses. Right. Now, in my Excel spreadsheet, I have a balance. And the way this is calculated is I just take the bigger side, 17,300, minus the smaller side and put the balance on the bigger side. So if we have revenues that are larger than expenses, is this 10,900 a net income or net loss? Well, revenues are bigger than expenses, so this is a net income. Notice I put that in my notes. So this 10,900 represents our net income. So let me go back to my accounting lab, check the answer. All right. Next, we want to close according to this, we need to close income summary. So the third step of the closing process has us close the temporary holding tank called income summary, which now contains net income. And we close that to capital. So notice income summary over here has a credit balance. So how do I close this? I'm going to close it by putting the 10,900 on the other side. And the reason I put the font for this number in red, the closing entry in red, is because it's easier for me to remember that this is my closing entry, not the other 10,900. So notice this is my closing entry and this is a debit, so I need to debit income summary. And the number was 10,900. Wonder if I can copy and paste that. Copy and paste. Oh, that's cool, it worked. Let me put the comma in there. Comma is optional, but it's kind of easier for you to read. All right. So I've closed income summary. It has a zero balance now. So where does the income summary get close to? It gets close to capital. All right. So one thing I want to do first is, now remember, you don't have to do this T account for capital for this homework problem. For this problem, you do not have to calculate the balance of capital, but in the real world and in future homework problems, this should say future, you will need to calculate the ending balance of capital. So let's calculate capital. So we need the beginning balance, or the balance of capital before we did the closing. So I'm going to go down here and find capital. So here's capital. Notice it has a 48,800 balance on the credit side. So over here, on this, in this cell that says from adjusted trial balance, I'm going to put 48,800. All right. So now I can close my window here. So getting back to the third closing step, where do I close income summary to, which is net income in this case? It gets closed to capital. So I'm going to copy and paste this. It will be my credit. So over here, I'm going to take this 10,900 and I'm going to place it on the credit side of capital. And then watch what happens with the new balance. We now have a balance of 59,700. Again, we don't need this balance for capital in this problem. However, in future problems you will, and also in the real world, one of the main reasons you do the closing process is to calculate our new capital amount. All right, so now we need an explanation. Let's go back to my accounting lab over here. We need to close income summary. And then the fourth step, we close draws. Let me go open my data table. We need to close draws to capital. So let's find the withdrawals. Here we go. So they had an $800 debit balance. So how do we close account with a debit balance? We need to credit it. So I'm going to skip the first line because that's the debit. I'm going to go to the second line. I'm going to close withdrawals. And where do withdrawals get closed to? In other words, what account does withdrawals affect? It affects capital. And how does it affect capital? It makes capital go down. And we need an explanation to close withdrawals. So back on my T account, I'm going to put my, notice capital over here is being debited for 800, so I'm going to put $800 over here. And now we finally have our updated balance for capital. So notice capital went from 48,800, and this number came from adjusted trial balance. It increased 10,900 by net income, and it decreased 800 due to withdrawals. And our new balance is 58,900. So that's good. Capital went up for the period. All right, switch back to my accounting lab. Check my answer. Oops, I clicked on the wrong account. There we go. Not so excellent. All right, next it says, how much net income or net loss did Stone Sign Company earn for the year ended January 31st? How can you tell? Well, because we did a T count and we labeled it, we know we have a net income. So how did we calculate that this 10,900 was net income? Because revenues, well, first of all, we got this number by taking revenues, subtracting expenses. So revenues were bigger than expenses, therefore this amount, which was the balance prior to closing, is net income. So the net income number is 10,900. Let me copy and paste that. And then it says, how can you tell? We know this because revenues exceeded expenses. So revenue, service revenue, exceeded total expenses by this amount, and this was the balance in the income summary account. So it was the balance in the income summary account, which we have right up here. And that's it.